Hi, this is Joe Rabil with Rabil Stock Research. So to start the show, I do a lesson, and I want to do one on MACD today. And I want to give you a little bit different sort of, almost like a framework in how you can use MACD in a very simple way, I think, to give you a strong bias for any stock or market that you're looking at. All right. And then we're going to look at some sectors. There are some shifts taking place in some of the sectors. And one of them, I think, is pretty substantial, definitely worth talking about a little bit. And then we'll look at a few other things along with the symbol requests that came through this week. All right, let's go ahead and get going. So what I have here is the spider on a weekly chart. All right. And I've basically drawn in these lines, these vertical lines. And what they're showing is, let me just pull this up and give you a real good look. So this is the zero line for MACD. All right, this right here, I'm just putting that across so you can really see it very well. What I'm showing are the periods where you either downside cross or upside cross this zero line. Okay, so, and I'm talking about the black line, the MACD line itself, not the signal line, just the MACD line crossing above or below. And I made it red if it were a downside cross and green if it were an upside cross. All right, now what that means is that because this is a 1226, I use the standard right out of the box MACD, change a thing. This is 1226 exponential. So that means that if we get a green line, meaning we get a cross above the zero line to the upside, that means the 12 exponential moving average is crossing above its 26 exponential moving average on this time frame. All right. Now, what I want to point out here is that I don't believe that this is an operative signal, meaning we cross the zero line to the upside, I'm long, and I just stay long until it crosses to the downside, right? Or it crosses to the downside, I go short, and then when it crosses back above, I go long. I don't think you make a whole lot of money doing that strategy, all right? But I think if you use it as a condition rather than an operative condition, operative signal, I think it can really help you. It can help point you in the right direction. Now, when I think about it, I almost don't even think about it as a condition. I'm almost thinking about it like a bias. All right. So if I get an upside cross here to the upside, especially after kind of like a bear market flush like this, then my bias is to the upside. All right, as long as it stays above the zero line. Now, I know a lot of people will say, hey, what about if you get a big, ugly divergence pattern, that develops? Well, you actually had some that developed here and it kept pushing higher. My suggestion on divergences counter to the trend. All right, so if this is, let me just point this out. So if we're in this phase in here, in this zone, this part here, if I get a divergence that's counter to that trend, meaning the trend is up and I'm getting a divergence to the downside, I want to, and it's a MACD divergence. All right, I'm going to probably go take a peek at the RSI 14 or the RSI 20. I use a 20, but you could do it on a 14 if you want. And I want to make sure that I'm getting a divergence in the RSI as well. All right, if I'm not showing divergence in that indicator, then I'm probably not that interested. But I think an even easier way to do it is if we have confirmation in the ADX, in the trend, then I probably would be ignoring MACD divergences. Now, later in the year of 2021, we started to see glaring ADX divergences, and I just think they're better. So frankly, if I were looking at divergences and I was only going to play divergences and counter trend divergences type patterns, I would probably do them off RSI or just ADX. I wouldn't really use MACD. I think they give too many false signals. You can lull yourself into thinking that a trend is over. And I've seen this happen a lot of times with guys that are intraday trading, and they're just trying to take every time, they're trying to go counter to a trend that looks like it's topping out, but in reality, there's just this massive, massive strength behind the move. And MACD just isn't really giving us that feedback. All right. So I want you to keep that in mind. Be really careful about playing divergence when the trend is strong. All right. So you get this divergence show up. Now, it ends up being a nice little trade, but you've got to recognize that you're playing counter to the trend and the trend is pretty strong. So you've got to be pretty nimble. All right. What I actually like to do is play the divergences with the trend. And that's where my the signal that I use called a reverse divergence comes into play a lot in a bull trend. We see this happen over and over again when a market is strong and trending to the upside, right? So we want to be on the lookout for when price is making a higher high at the 18 or the 40 sometimes, but a lot of times at the 18. In this case, it was at the 40. In this case, it was at the 18. But when we get MACD making a lower low and the price is actually making a higher low. All right. So be on the lookout for that when the momentum is still strong, especially based on the ADX. So if we think in these terms, it can keep us sort of away from trying to pick a top too early. Trying to have a bias in place that says, okay, you know what, the trend is up. So I should only be playing to the long side when the trend is up. So if the trend is up, as long as this is above the zero line, I should probably just be looking for long plays during these periods, right? Where we're above the zero line. And if I do that, I can go down to the smaller time frames. I can look for entries in that. Now, I'm obviously going to be looking for confirmation that the trend is strong. So I don't only want a positive trend, I also want a strong trend, right? And if I have that, then I can have a decent amount of confidence. But I think this can give you a nice little framework in terms of keeping it real simple and saying, you know what, this is the bias I have. If MACD is above the zero line, I've got one thought process. If the ADX is confirming, I know I've got a pretty good outlook for, and this can be used on individual stocks as well. I'm just using it on the S&P as sort of like a general, a sense of what the market's like, but it can be used on individual stocks this way with the same mentality. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. As always, my comments are for educational purposes only, so do your own due diligence before making any investments. All right, so I've got the tab up. I've got a couple different tabs that I use pretty regularly in Stockcharts ACP, and one of them is this 11 chart setup, which I really like. Now, you can put whatever indicators you want, but the way this sets up is I've got it with about a year's worth of information for all 11 sector spiders. All right. And I've got the 18 and the 40 simple moving average for each. So I can just get a basic idea of the trend. And you can see most of the trends are bullish, right? I mean, you got energy basically flat, but pretty much everything else is it's trending the upside until recently we lost healthcare. All right. But what I like to overlay in the bottom scale is the relative performance. All right. So the line here that's shifting back from red and black is the relative line to the S&P. So when it's declining, that means this sector is underperforming the S&P. When it's rising, it means it's outperforming. And you can see what's happened to the material sector. It's basically been trending to the downside. It tried to shift things around earlier in the year, and it just couldn't sustain a move. And then it's really dropped off here in the fourth quarter. What's interesting is the XLC, so the communication services, look like it was pausing and potentially trying to roll to the downside, but it could never do it. If you notice, this moving average never turned downward. And now we've broken out, and this is showing a really strong fourth quarter. All right. So we've got some little shifts here and there. I mean, energy has been pretty ugly. I would say, technology has been flat, although there's certainly been some big winners in there. We've had some really nice moves in the XLI. A lot of industrial stocks have played well, but as a sector, it really has not done all that much this year in terms of, it's done about the market, maybe a little bit worse. But when you go and look at some of the individual components, there's definitely been some pretty big wins. Now, where the strength has come, we've had a really good year in the financials. It's been pretty solid. And for a great part of the year, the utilities were trading pretty well, right? And actually, the real estate has turned the corner. I think it's a little on the early side. It hasn't truly shifted. I think that might not happen until next year, but it's something to watch for both of these, the utilities and the XLRE. I could see them potentially showing signs of new strength again as we turn into 2025. But what I wanted to show, what's kind of really blatant, it's this massive drop in healthcare and this huge move in the consumer discretionary. This is really what's happened that I think is a little bit more blatant. I mean, financials have been trading pretty well all year. They've been one of the leading areas all year, but to get this massive move out of consumer discretionary out of nowhere, and I went through all the consumer discretionary stocks, every single one from a $300 million market cap and up. And there are a lot of breakouts. The only thing I'll tell you right now is that you got to be a little bit careful because a lot of them are overbought right now. You'd be chasing a little bit and probably buying into what's probably going to be a pullback before too long. But this is definitely an area you want to go starting to, put together a watch list. Or if you take my service, obviously you'd have that. But I would just tell you that the breakouts in these, I think, are legitimate enough. Now, the financials also have started to pull back because they got so overdone as well. And I think they needed to do that. They need to go through some kind of a consolidation. But this has just kind of taken place in the consumer discretionary. Just really starting in beginning of October. So pretty important move there that is getting a little ahead of itself in the short term. Okay, let's switch over to the, I've got my 5-chart layout again. And what I want to do now is just go through and let's actually start out with the QQQ. We have gotten some sign of life here overall, meaning we not only broke out, but we're getting this relative strength line to show signs of improvement. I think that's a good sign. Now, what is glaring to me and has me as I think is a big warning sign is what's taken place here. This ADX is still only at 17, even though we're at a new high. So it's very possible that this ADX is going to reach 25, and then we're going to have a problem. So something we're going to have to watch as we move into 2025. I don't think that'll happen before then. But if we get up into that area, we want to see how price reacts, how this indicator reacts at that level, and see if we get some kind of a price reversal at that point. IWM continues to struggle to get anything substantial going. Doesn't mean it's obviously made a move, but we want to see this kick in on a relative basis versus the S&P. I think if we get that, then this is going to be a much stronger underlying market environment. All right. I think we've got a much better chance of making money in individual stocks trading and everything if that breaks out and the relative strength really kicks in. Now, it doesn't mean you can't make money. It just is going to have to be a little bit more selective, going to need to be, because, we can't just have the MAGA stocks continuing to lead. We've obviously seen some expansion, and there's a lot of individual stocks that have shown improvement. But I really like to see the confirmation from the index. And we haven't seen that quite yet. So something to definitely be on the lookout for. All right, so let's start going through some of the requests that came in. So this CCJ has made a move. It had a pullback on the monthly, and then it ran up for the last 3 or 4 months and broke out. But, so essentially what we're seeing is a breakout that's trying to hold. Right. And what I would like to see is this maybe come back down and test and see how it handles this support area The way it's reversing, there's definitely been a little bit of volume. You see the distribution that took place at the breakout level. So we tried to break out and then we get these signs of distribution. We want to be on the lookout for that when it takes place. I don't think this is ready to take off, but I do think there's some pretty good underlying support there in the low to mid 50s. So we just have to keep an eye and see how it pulls back. Coin looks really good. All right. Now, the question becomes is how do you enter this setup? Because we had the pullback on the monthly and it was beautiful pullback, pinch play, strong momentum. All this is right out of my course in my book. And then we had an ABC correction. I mean, this is very similar to what happened to Bitcoin. Zero line reversal, low ADX, and then look at the big green bar. So I'd really want to be in on that big green bar. All right, I would say that was basically the entry, is getting in on that. Now, the question becomes, how do we do this without really chasing? I don't like to chase these. So I think what I'd be looking for is maybe for this RSI 5 on the weekly to just come on, maybe dip back down closer to the 50 mark. Now, what you might do is drop down to a daily chart, and we're already there on the daily, but I don't feel like this is a good entry. So I think you're going to have to get a pullback on the weekly to really get this set up again. I mean, you could play it. You could play it off the daily and be a little bit more aggressive, but it increases the likelihood that you could get stopped out in this. But let me tell you, I think this looks really good. We're looking for an opportunity to get a second entry, right? We had a great early, not early, but like first signal, right? And with good volume. And now the ADX is kicking into gear. Everything's happening. We need some kind of a little dip here for our next entry. PLTR, been in the news a lot. And, you know, when we start to get a lot of press, so we want to identify these as they are emerging, right? I mean, down in this level as it's emerging, showing strength and then pulling back. And now it's kind of taken off. I mean, there were multiple opportunities to play this, and now it's kind of gotten away. So I would actually be thinking more to be more of a seller than a buyer right now as a trader. All right. From a long-term standpoint, you know, you could try and hang in there, but I think there's going to be a lot of volatility. This is one of the more volatile stocks there is. So just expect volatility. I'm going to show you on the weekly chart what you got to live through. You know, deep pullbacks along the way. It's not a, you know, it can be a stomach churning event owning this for longer term. But, you know, if you put a right size position on, you can live through the pullbacks and do that. But this is not the time to do that. I think you get another opportunity at some point to be a buyer. All right, so PRCH, this is intriguing. Look at what's going on the weekly chart. This is what really kind of jumps off the page. Nice move. Look at the volume, look at the ADX, and look at the MACD. We've got everything kind of confirming something's going on here. Now we need an entry. We need a pullback. I do like the fact that this is back above the 18-month and it's crossing back above the 40-month. So all those are good signs, but the problem we have is entry. And I personally am looking for this to come down and form some kind of an opposing trend pattern. Again, this is out of my course in my book. I don't want to chase this, so I'm looking for this to come down and actually break down on this time frame. I call it opposing trend because I want this trend to be almost looking like it's down while this one's up. We're just too far away from the 18-week to consider this a buy here. All right, so I'd be a little bit more careful on this at this point. See if it can't settle down or pull back a little bit. And then I think it looks a little bit more attractive, but definitely one you want to keep on your watch list. Does look very intriguing. All right, TRGP has made quite a run. Now, this is there's been some areas of energy that have had a big move, and it looks like they finally sort of peaked out for now. They're starting to pull back. And after the run that they've had, I wouldn't just be looking for, you know, a 3-week pullback and then it's going again. I would not be surprised if this is going to spend a little bit more time going through, you know, a little bit more of a complex pattern here. You know, it's not necessarily a reversal pattern, right? But it could be some kind of a complex corrective wave that just causes this to kind of work its way back down a little bit more. Now, it's possible that won't happen until the new year. Maybe we get one more run to a new high, but I don't see a setup right now that I would be all that enticed by. It's still too far from the 18-week. The 18-day just rolled over, so you got to be careful on that one. All right, so Tesla, I think there's a lot of upside in Tesla. I really do. This is one that I had highlighted certainly to my subscribers, but also on this show a while back. And just the fact that this had formed this big cupping pattern, this big base, and then this breakout through 300 was the key. I mean, once we got through 300, I really felt like the potential for this to be a long-term play to the upside is pretty significant. Now, again, we need a pullback on the weekly. It's too far now. It's run too far. I wouldn't want to buy this. If I buy this here, where am I putting my stop? I mean, even if I use a moving average, which I don't really like to do, it's really, really far away, right? Or if I come below the last swing low, I mean, it's just so far. So we need to form some kind of a pullback to set up a new buying opportunity. Thanks for watching this week. So if you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.